Well, g'day there traders. Thanks a lot for joining me in this Tuesday afternoon market recap. What I'll do, I'll provide you with a short market recap today. I'll make a larger one as at Wednesday afternoon once we have a little bit more data to work with this week. Now, again, the markets have rallied. The Dow Jones Industrial Average is up a little bit over 200 points. The S&P again was the major market mover. It was up close to 40 points, and the Nasdaq again, very nice gap we saw, up 100 points. Now, in the grand scheme of things, look, this does look quite bullish. It blew through that resistance level around 16,511, which I put out last week. What I really want you to pay attention to for the time being anyway is what volume is doing. We spoke about this over the weekend, and what we really want to see, if this is going to be some form of a terminal reversal chart pattern setting up across all three of the markets, is that we expect during this rally, which again we have been ushering or knowing that it's on the horizon, we want to see declining volume. We want to see very low volume, so we know that people and traders, investors are not getting carried away on the upside of the market. What we call this is the slope of hope. It looks good on face value, but once you dig a little bit deeper and realize that there isn't any underlying volume behind the bullish move, it all happens very, very quickly when we get that momentum rollover up around these higher resistance levels, which we can see the markets trading into. This is relevant for not only for the Dow Jones Industrial Average. You can see the declining volume over the last 3 days on the bullish move. You can see on the S&P. Now again, this is quite decent, but you can see the fledgling volume as we progress higher up into these higher resistance levels. The same is with the Nasdaq. Again, declining volume during this sell-off. You can see the increasing red volume bars. Now again, if you want to analyze the markets in the way of gaps, yes, this is quite an interesting gap. It would not surprise me, or it would surprise me, pardon me, if we didn't come back and at least retest these gaps short term. That will coincide with this very strong resistance level, which it appears that we gapped over today. Now again, please do not be getting carried away anyway on the bullish side of the market. Yes, it looks very, very tempting to be getting in, at least on the arbitrary momentum higher. I just want you to pay attention to the volume, pay attention to the technical signals which are not being generated, of course, to go long yet. We need more additional confirmation in the way of candlesticks, in the way of chart patterns, in the way of volume, in the way of technical indicators also, which is saying, look, this market is resilient, it wants to keep moving. At the moment, the best we have is a little snap back to the upside. Now, I haven't even addressed the fact of Fibonacci retracements, Fibonacci support and resistance as well. You can see right here, we've just rallied into that 0.382 resistance level. I'm not even going to touch on that. I will do that tomorrow for you. What I can say as well on the Dow Jones Industrial Average is that we've just rallied into that 200 simple moving average. Expect the market to slow down here. We've also just hit that 20 and the 10 exponential moving average. We still have the 50 exponential moving average to act as resistance. So you can see all of these resistance levels which still need to be tested. And of course, we're going to see a reaction around these levels. That reaction, of course, could come in on Wednesday. It could come in on Thursday, it could come in on Friday, but this is not the location right now, ladies and gentlemen. If there's anything to take away from this video, this is not the location now to be looking to enter into new long positions. If we analyze some of the stocks which reported earnings, Apple was up $2.71 today. Left us with a little bit of a hangman candlestick at a resistance level. Now again, this can be interpreted two ways. It does have that lower wick indicating buying pressure, but at the same time it gapped up and it traded down. You can see the candlestick is dark. That means that it opened up at the high of the candlestick. It traded and closed lower than the open. So that is actually quite bearish at this very, very strong resistance level. Quite an interesting candlestick on the daily for Apple. Now again, Hal came out after market yesterday on Monday afternoon, and it's reported earnings. It was up $2.74. Pretty decent move for Hal. It was up, I think, 4 or 5%. But again, look at the candlesticks, look at the overall net movement. I mean, it's not a buy signal in and of itself. You can still see that we've got the declining 10, the 20, and the 50 exponential moving average. We also have a resistance level right here that Hal has rallied into today. So again, you don't want to be trading bullish in the face of such a bearish trend. If anything, Hal is going to rally. It's going to set up a lower high, all right? And then we're going to be set up for the new shorting opportunity, which is going to take out this low established in October 2014. These things take time to set up. That's why at the start of the week and over the weekend, I said, look, this market is going to be hard to trade this week in the way of swing trades. I hope you're all paying attention to that. As I look through the list, looking at Amazon, Amazon's got earnings coming out, I do believe, on Thursday US time. So that's not really a tradable stock at the moment. Baidu's just moved straight back into no man's land, which we spoke about over the weekend. Caterpillar again. Earnings is coming out very, very soon, either tomorrow or Thursday as well, which is going to be exciting to see. Disney is absolutely rocketing high. This is not a trade that you have missed. It's not a trade that we missed at all whatsoever. This is just a quick snapback move. It looks like a bit of a V bottom. And when you talk about chart patterns, V bottoms are the hardest to trade. The reason why is because they occur so quickly. As you can see, Disney is a textbook example. However, V bottoms generally like to show up at the end of market sell-offs, or at the end of a bearish trend. So if I go back to the Dow Jones Industrial Average, this is a classic V bottom. I'll just change to a closing price. I'll zoom in on the data for you. Zooming in, going back to 2009, going back. You can see right here, nice V bottom, which established the base of the overall bearish trend into the new bullish trend, which we find ourselves in at the current junction. Now, gone off on a little bit of a tangent. Let me continue on. We've got Facebook. Let me move to the current juncture over here. Facebook is the same as Disney, just rallying off support. No real trade setup, which we can really speak about. The same with Facebook, just moving back into that resistance level, which we expect. This is going to be a very interesting time to see if we sell off or if earnings gives us potentially a new bullish gap, which we can trade on the upside. Again, that'll all confirm in about a week. Google. Again, 2 inside days based off Friday's candlestick last week. No net movement. HAL I've touched on based on earnings. Netflix is really struggling to break above the earnings gap, which you can see from last week when it gapped down about 20%. No move in Netflix. We're just waiting for another shorting opportunity. Once these exponentials catch up, they're still a very, very long way away from where current price is. And as you can see, Starbucks, look at this, a little bit of a bearish counter attack right here as at Tuesday afternoon trading session. So although the Dow Jones Industrial Average was up over 200 points, you can see Starbucks retesting this old supporter's new resistance down 34 cents. So you can start to see how the trades are starting to progress with us. Tesla again trying to fight off that support level. We haven't had a trade on Tesla, or we did have a very, very good trade on Tesla last week, but really the next entry is at 212.40, unless this is some sort of a bear flag. At the moment, it's not enough to trade or to justify a bear flag. Horrible volume on the bullish side. Look at that. It's trying to move higher. There's no buying pressure supporting Tesla at the moment. 212 is still a very good entry. And Twitter, this is a very good example of what I was speaking about over the weekend. Pro students, this is for you. Go back to Pro, watch me analyze Twitter, watch me draw the support and resistance, and listen to my thought when I broke down Twitter. I questioned myself, do I want to place a buy order here at $50.79? That was the question that I answered in front of you during that recording. The answer I came to was no, it is not. The reason why is because the market is unsettled. The market is very volatile and we're not getting clear signals, either bullish or bearish, based off the price action leading into this trading week. As you can see, you probably would have been triggered in as of Monday. Got a nice gap up on Tuesday. Everything would have looked good, but you can see it's starting to fail. You got a bearish counter attack and we closed below the technical entry price, which again, we did not set up because we didn't get market confirmation. So you can see right here, just by sitting in the class, understanding, watching me trade these markets, watching me trade these stocks, you can see why I'm entering into certain positions. You can see why I'm sitting on the sidelines for other positions. You're listening to my thought, you're listening for my rationale behind it, and I hope you're taking away a lot of valuable lessons in the way of trading the stock market for profit and what it becomes, of course, to become a profitable trader. So ladies and gentlemen, that is actually a bit of a long Tuesday afternoon market recap. Have a fantastic Tuesday evening. I'll be back Wednesday. If you have any questions, email me success@pivotpoint-trading.com. All the best. Goodbye.